Morning, everyone. Welcome. I'm Jamie Bailey with the RVAR Education Committee. It's us. Today's presentation is brought to you by RVAR's Education Committee. This is a hybrid class with attendees here at the RVAR office and on Zoom. Laura Benjamin is joining us here from her office so that she can monitor those joining us via Zoom. For those of you on Zoom, please remain muted until a time when you might want to pose a question. There will be times during the presentation where we will ask for questions. For those of you on Zoom, you can either type something in the Zoom chat, which Laura is monitoring, or unmute yourself to ask your question. We will also recognize those in the room for questions. We are recording today's class and will make the recording available on RVAR's YouTube channel for at least a 90-day period. We are providing a survey to the in-person attendees for today's class. We will email the survey to those attending via Zoom. Not only do we want your input on today's class, but we want your suggestions for future classes. Before we get started, let me promote RVAR's next class. RVAR's next class is titled The Price is Right. This class will demonstrate how to establish the list price by creating a comparative market analysis using one of the 3 programs made available to you as a member of the Roanoke Valley MLS, Flex, CRS, and RPR. Mark your calendars for Wednesday, August 27th. Online registration is open for the August class. And now for today's class. Let me introduce today's 2 speakers. We have Shanna Ferguson. She is a protection advisory with Holley Insurance. And we have Derek Wiley, who is president of Derek Wiley Agency. And so at this time, I'm going to turn it over to Shanna and Derek.
How's everybody doing today? Appreciate you having us. We're going to tag team this presentation as best we can. The insurance industry is not the most well loved right now, especially by our clients at times, and obviously your prospective sellers and buyers. But what we hope to do today is just kind of talk a little bit about some of the challenges that you guys are going to face as you assist both your sellers on the sell side and the buy side with the real estate, and how insurance is going to impact that. And hopefully we can shed some light on it. I've got about 22 years of experience in this. I spent 6.5 years as an adjuster, and I own an agency out in Daleville and Botetourt. We have about 5 team members that work for me that are licensed. So got a lot of experience. Me and Shannon we're going to have some stories that we'll tell. Hopefully that'll help shed some light on some of the topics that we're going to broach today. So.
Yeah, hoping that this will be more of a discussion. So ask questions. We've got some things that we want to go through, and again, tell you all the horror stories so that you can remember these things and prepare your clients best.
All right. So first off, we're going to talk about the market. You guys may have heard a conversation about a hard market versus a soft market as it relates to insurance. So a soft market, kind of like the market was in the real estate market a little bit ago. It was a buyer's market. You may remember those days. And so in insurance, it's the same way. There's more competition. That means the carriers want business. They want to write all the business they can write. So their marketing, their advertising budgets are full force. You see it on television every time you turn on the TV, like every 3rd commercial is an insurance commercial. That's the soft market. Underwriters are willing to work with us. So just like you guys see on the lending side, where you have to face that underwriting, getting that client across the line to the finish line to get that loan done, we face the same thing in insurance. And when the times are good and the market is a softer market, it's more price competitive. And that is their goal, is to attract new clients and to write them. As a result of the inflationary pressures that we had over the last several years, insurance companies are just getting hit over the head I think it was about 3 years ago, just to put some things into perspective. We all know the price of lumber shot up, right? We had high inflation. We've seen the value of homes shoot up exponentially. The National Automobile Dealers Association about 3 years ago had the value of used cars for the first time ever in their 40-year history actually go up. Cars are supposed to be depreciating assets, but they appreciated. And what's happened is all of that increased cost is borne in the end by the insurance industry. We are the ones that have to pay for the houses when they get damaged, the increased cost of labor, the increased cost of supply chain shortages, right? And inability to get materials in. And so what's happened is that is reflected in higher insurance pricing. And it's also been reflected in them really constraining the market, kind of cutting the tap off in regards to how much new insurance business they want on the books. And so that leads to a hard market. And that means tougher inspections, limiting age of roofs, limiting, number of animals or pets that someone can have. I mean, some of the guidelines that carriers have are really wild. We had one last week. They had more than 3 dogs. And the carrier said they got to exclude the dogs or we won't write the policy. Like entirely. We're not talking about vicious breeds. It might have been like 2 Shih Tzus and a poodle, but they were like, no, we don't want it. It's too many dogs. So it's really, really tough. And so that's kind of what we're facing now.
Because at the end of the day, right now in this hard market, they don't want the risk. They don't want your business. So we have to convince them that yes, you do. Yes, they're okay. The house is wonderful. Here's pictures to prove it. So they are coming up with tighter underwriting. You also had a thing happen in the last 5 years or so with roofers going out trying to get business, going, I can get insurance to pay for your roof. Well, that statistically made a significant difference now. And so actuaries, when they're figuring out all their number crunching and all the things that they do to come up with our underwriting guidelines, they say, well, there's a statistical significance now that if their roof is either 10 to 15 years old, chances are we're going to have to pay. So that's where the roofing guidelines are coming from, is because of the fact that those roofers were knocking on doors in enough cities that it made that statistical significance. So all of that is at play when they're coming up with these underwriting guidelines and choosing whether or not to write business.
Yep, I think we're good. All right, so
Hard market also leads to increased rates.
Yeah.
So the older your roof is, it's going to be a higher rate. The older the home is, it's going to be a higher rate. The replacement cost on the home itself, we are looking at rebuild costs. All of that has gone up. So all of those things are going to be a reason for insurance rates going up. Derek noted, you've got inflation at play, supply chain issues, harder to get parts. So that car that they used to repair in 2 weeks when you hit the deer is now becoming a total loss, because that total loss is going to cost less than the 6 weeks of rentals and, all the parts costs going up. We also have seen, statistically significant increases in catastrophes and more frequent, that including auto crashes. So you're looking at, people were supposed to be driving less in COVID, but they were 33% more reckless. And that made a difference. So you've got a lot of these windstorms that have become more along the lines of hurricanes and taken off pieces of roofs and taken, and then you can't get a roofer to come out unless, they're not going to do repairs. They want to do a complete replacement. So those kinds of things are driving up all of those costs. And unfortunately, because these companies have not been profitable for 2 or 3 years, they're now increasing the costs on your end. The other thing that they're doing too sometimes is they've lost a bunch of money on the auto side, so they're making it up on the home side. So you've got carriers that are playing with their financials to try and figure out how they can become profitable again. And unfortunately, all of that lands on us, the customer.
Yeah. We've had some carriers that actually have exited markets too.
Yeah.
Like there's some insurance companies that have just flat out either pulled out of the property market entirely and don't want to write property insurance. Or companies that have just pulled out and said, for the time being, we're going to put a pause on new business. So this becomes very important in what you guys do, because we both are independent agents, which means we represent multiple carriers, and we have certain companies that are really, really great for certain risks. And I know personally, I had a couple of companies that if we did have a property that had a little bit of difficulty being placed, like maybe the roof was a little bit out of standard, or maybe the property wasn't in perfect condition, because not every house that is bought or sold is in perfect condition, we would have a place to put that. And what we found is some of those companies that were kind of like our carriers of last resort, they've just exited the market entirely and just put a pause and said, right now, we don't want any business. And sometimes it's state specific as well. So, you know, you see, we're in Virginia and you think, well, you know, we're in the mountains of Virginia and the Roanoke market. It's not that risky here. Unfortunately, we kind of get put together with Northern Georgia, South Carolina, North Carolina, and Virginia, Maryland. This mid-Atlantic region gets a lot of, unfortunately, undue pressure. And so when the insurance companies start looking about the places they want to cut back on, they'll literally pick an entire state. And they won't just say Tidewater. They'll say, we're going to limit business in the state of Virginia, at least for a time being, and restrict how much is written. So that's what we're seeing as well as a result of these more frequent and severe catastrophic losses.
The other thing I'm noticing too is if they don't want to pull out, they'll just non-renew monoline business. So if you just have a standalone home with, say, travelers, they are going to find any reason to non-renew that the next year. Unless you end up bringing over auto or won't write new business without a bundle too. So I had one the other day I quoted with and without the bundle, and it made $800 a year difference. It used to be maybe $150 a year difference. I mean, we're talking big money to bundle those together. So that's another thing happening.
All right. Reinsurance, a term that people may not be aware of. So insurance companies buy insurance on themselves for catastrophic loss. So this is something that comes up in conversation with clients quite frequently. We'll have someone say, well, why would the California wildfires have any impact on my insurance rates in Virginia? Well, those insurance companies, they are going to set a stop loss limit, and they're going to go and buy reinsurance. And they're going to say, if our losses exceed $100 million, $200 million, whatever the number is, threshold is in a certain area, at a certain time, we're going to buy reinsurance for that risk. And then that reinsurer is going to step in and try to limit the risk that the insurance companies have. And they buy this reinsurance in risk pools. And they're companies that you probably haven't heard of, but the reinsurance market is a global market. It is not a Virginia market. It's not a United States market. It's a global market. The companies that do reinsurance are reinsuring risk all over the world. So when you're in a world where it's more dangerous, right? We have a lot of things in the news right now. There's conflict breaking out. When you have a lot of weather events that are happening all over the world, all that leads to higher reinsurance costs. I've got a company that I represent that's a little local company here. They're Virginia based, Virginia only. And I went to one of their presentations about 9 months ago, and they said, we're raising our homeowners rates by 20%, not because we have losses. In fact, we're profitable, but our reinsurance cost went up 25% last year. So we have to do this because if they don't buy reinsurance, especially, and every company buys, I mean, even State Farm was reinsured in the California wildfires. They had a limit, a cap, but every company has to, smaller companies even more so. If they don't buy reinsurance and a loss comes through that's significant, they could go out of business. Insurance companies have what are called reserves they set aside to pay losses, and they can have their reserves depleted, and then they would no longer be in business if not for reinsurance. But that's just something that, you know, John Q. Public is unaware of. They have never heard that term. They're unaware that that's something that exists in the insurance market. And it kind of explains how things are interconnected. So even though you may not realize that flooding event, when the hurricane dumped all that rain on Western North Carolina, how's that going to have an impact on us here? Well, in and of itself, it may not have an impact, but when there are enough of those things happening all over the world or all over the country at different times, the reinsurance costs start to creep up very, very quickly. And it gets passed into your premiums, and it gets passed into your underwriting guidelines.
So that's the worldview. That's kind of the bigger picture stuff. What we want to get into really now is when you have a buyer or a seller, what sort of things should you be looking for? What is insurance impacted by right now? What are those tough underwriting guidelines we keep talking about? And how do we end up making that assessment? So one of the things that, when you go to get your auto insurance, we're going to pull that MVR. Well, the same thing for homes is called the clue report. So it shows past claims, whether that's for the risk itself, that house, or for the buyer. So when you make homeowners claims, those follow you. So past water fire claims. And it used to be that it was really just the number of claims or the severity of claims that would impact your underwriting. Now they are actually asking if there's been a water loss, whether it's that buyer or not. We want a separate inspection done to make sure that that water loss or whatever happened has been properly repaired. So sometimes they actually require us to go get extra inspections. I had one that only had a $5,000 water backup. It was a refrigerator that leaked. They wanted us to go get a licensed Class A master plumber to get them prior to purchase, go out and inspect and make sure that everything from that water leak was repaired properly. So it can mean higher costs. And that's something that the buyer may not even be aware of. So the earlier, one of the things I really want to hammer into you, the earlier you can start the conversation on insurance, the better with your buyers, and even your sellers, have, their insurance agent.
Who pays for that cost?
The buyer.
The buyer does.
Mhm.
Question, please, from the people on this.
Sure. So she asked who pays for that extra cost, and that would be on the buyer. Mhm.
Yeah, I used this analogy before, you did a good job of it, but like if you have an auto claim in your car and you go and buy another car, or you get a speeding ticket in your car and you go buy another car, it's not like the insurance company says, oh, well, that happened in the Corvette. You went and bought that Camry. It's a much safer vehicle, so we're not going to worry about the fact that you had 7 speeding tickets in that Corvette. You now have a Camry. It's the same thing with homeowners insurance, and this is something as a realtor you're unaware of at times. These are things that don't come up in conversation. But what happens is, I used a story earlier. We had a client move here from Seattle, and they bought a very nice home, and it was, I think, a cash purchase. And they were looking to get insurance, and they had homeowners claims on their house in Seattle. And because they had those claims, we had a hard time finding an insurance company in Virginia that would write them. In the soft market, sometimes we can work through these issues. I had a client one time that moved from Chicago. This was back in like the 2009, 2010 timeframes. We're just coming through the financial crisis. You guys may remember, and I can tell you as an insurance agent, it's happening again, but like copper thefts, things like that, houses were, especially vacant properties, having copper ripped out of them. Well, they had a condo in Chicago, and they had 2 losses. One, they had a garden level apartment. And so if anybody knows about the Chicago sewer system, when it gets overwhelmed and they can't get all the water out to the lake, they like open up the gates and this stuff starts going into the street. What flooded their apartment, their condo. So they had a claim for that. And then they had moved to Northern Virginia, and they ended up having another claim because somebody, while they were gone from Chicago, broke into their condo and stole all the copper out of it, stole the HVAC copper, stole all the plumbing out of it, etc. In a soft market, we can call an underwriter and try to tell a story. That's a lot of times that's what insurance agents are. We're storytellers. We try to find out from the client what's going on, talk to an underwriter and say, listen, I know you're looking at this client and saying, hey, they've had a couple of claims, but let me paint a picture of why they occurred. They're buying a beautiful detached single family home in Manassas. It's not going to have these types of losses. We're not going to get the water loss that they had in Chicago. We're not going to get the theft of copper. And they would be, okay, that sounds
There's
good.
some negotiation there
Correct.
that can happen. We'll have a higher deductible for a little while, or we'll insure, no more claims for the next, 3 years till these fall off, and you can kind of negotiate those things. Now we have hard times getting an underwriter to even converse with us. Like I can't get directly to an underwriter with some of my companies, period. So there's a lot less negotiation happening now. It's very hard to place a house with 2 claims in the last 5 years, period.
Yeah, they've limited it. Yes.
So on
the slide, it says essential for buyers to review before closing.
Mhm.
Are you trying to imply they should consider not buying the house based on the clue report, or what do you mean by that
Repeat
statement?
the question.
Sure. So she's asking about this last one, essential for buyers to review before closing. She is asking about whether or not that may prevent them from closing. And my opinion is it may. It may be that a previous owner didn't disclose or didn't know or what have you about a massive water claim. And that may still have damage in the house. Part of my reasoning for telling at least all the real estate agents I know and my clients is start this process early so you have more information earlier on and you can negotiate those things in the contract. We know this house had a claim. I want to make sure, get the seller to pay for an extra inspection. That's when you can negotiate those things so that the cost is not on the buyer as much, and better prepare them.
So can you, if you're thinking about doing a contract, when can you ask for a clue report on the property? Do
So,
we have to be under contract with that buyer first?
so the question was, do we have to be under contract with a buyer before a clue report can be ordered? The reality is, if your potential prospective buyer is looking at a house and they call us and want us to run a quote, we can run a quote and get a clue report, and you could know that information before you even make your offer. So because this stuff is not publicly available information, like these clue reports, you do need to talk to an agent. But yeah, we have the ability to run a report on those properties. We just need to be able to run a quote. Typically, the clue report of the underwriting process is part of the quoting process. And when we're putting together quotes, the carriers will have the clue report be part of that, and it'll pop up and run those during that time. But yeah, there are certain loss types that can occur that can prevent or make a house, I don't want to say uninsurable, but just let's say difficult, right? So let's say that we have access to 15 insurance companies each that we can write a property with. That number may get reduced down to 2 or 3 based on what type of loss there was. I had one recently where there was a water backup, a sewer backup in a property, and the West Virginia Water Authority had repaired it, but we had no evidence that that had occurred. We had no documentation. It was at an HOA. The HOA didn't have any documentation. Like, nobody could provide anything to show that this has actually been repaired. And so the insurance company was having a tough time because they were like, we need to know that this isn't going to happen again. We knew that they had fixed the inside of the property, but the question was, has the problem itself been resolved? And that comes back to, like, say, plumbing leaks that we were talking about. Like, why did it happen? Is there galvanized piping and cast iron piping in the house that's older? Is that the reason why it happened? And so, yes, they went in and repaired this 1 6-foot section, but then the rest of the house is galvanized and cast iron. It's like, well, then they know what's going to happen again. So the insurance companies, I mean, they are in the business of, actuaries in the business, I say it's like Vegas, right? Like, they're making a bet that you're not going to have a claim, and you are making a bet you are. That's why you're paying the money, right? And so they've got pretty good, evidence to support why they have the rules they have. And so we just try to make sure that if we see those issues as agents, we bring them up. And if it comes upon a clue report, we can make you aware of it. You can make your buyer aware of it. And like she said, sometimes sellers, houses have transacted so many times these last few years. I know I sold my last house I sold was in 2016. It's on its 4th owner. It's 2025. So in 9 years, that house has moved 4 times. I replaced the roof on that house in 2012. And that's a question that comes up all the time. When was the roof last replaced? I promise you the current owner has no clue how old that roof is. So, yes.
Can you explain ramifications to the buyer when you go from a pool of 15 carriers down to 2 or 3?
Yes.
How does that affect the buyer?
So the question is, how does it affect the buyer when the pool of company goes from 15 to 3 in like the scenario that I gave? Biggest is pricing. You do not have, you are in a insurance company market, shall we say. We talked about the buyer's market and a soft market. In a hard market, the insurance company, they are setting the rules, and you are kind of stuck playing their game. So that can create issues if you're a lender, right? If you're and you're trying to get a deal done and you got DTI issues, right? All of a sudden, insurance company comes back and they're like, hey, the premium's going to be $3,000. And you're like, well, $3,000, normally I put $800 down for the premium on these, and that's normally good enough. But they don't know all these things on the backside. They don't know what was those prior claims. That's reduced companies that you can pull from. As a result, those few handful of companies that are willing to do it, they can kind of have, like, name their own price. So their premiums are higher, the costs are higher. Sometimes we have to go to the non-admitted market,
Yes.
which is the kind of the insurance market of last resort, not the companies that you guys may be familiar with, but you've heard of, like your Lloyd's of London. There's all kinds of those. There's Scottsdale, which is a division of Nationwide. There's Lloyd's of London, USLI, division of Berkshire Hathaway. There's all kinds of
Or
companies that,
even at the state market.
yeah, the state market,
Once the-
BPIA.
Yeah,
Yeah.
that once there is, what is it, Virginia Property Insurance
Association.
Association. So that is the last resort. They will insure anything and everything, but it's gonna cost.
And if you have a loan, you may not be able to do it because
Right.
they're gonna want replacement cost. They don't want actual cash value. So there are issues there.
Yeah.
Got a question? Okay.
From an underwriting guidelines standpoint, how long do these claims stay in the history to be considered? 5 years? Okay.
Yeah. So her question was, how long do claims stay on your record, from underwriting guidelines perspective? It's gonna be 5 years. Typically, it's all changing, so note that this is fluid. One claim is gonna get you a surcharge of somewhere around 15 to 20% from what I'm seeing. 2 claims is either gonna be not eligible, or it's gonna be 50 to 60%
Mhm.
in my experience here recently, a surcharge on premiums. So if you're talking about $1,000 home, or, you know, what typically would be $1,000 premium, and they've got 2 claims, either they're not gonna be eligible, or you're gonna be paying more close to
Double that.
double that, $1,800 to
And
$2,000.
does that surcharge fall off after a certain period of time?
Yes,
Supposed to,
yes, it can fall off. The
Yes.
problem is we've had rates go up at such a rate that, let's say the
really
surcharge
has.
is gonna fall off at 7% a year, but then they're taking rates up at 8% a year, so it won't feel like it does, but typically, yes, over time,
yes,
those surcharges will fall off. Typically, in a 3 to 5 year time period, you'll start to see them tick away. So let's say it was a 30% surcharge, maybe it's 30% year 1, 20% year 2, 10% year 3, and then maybe it goes away in year 4 or 5. It's like I said, it does vary from company to company, but yeah, we do see them.
I did have a client who was moving here from out of state. They bought a $1.5 million house up on Peakwood. Beautiful. All these retaining walls, and that was a whole thing. But they had 2 small claims from where they came from, and I'm talking less than 5,000 each. But then the risk also had a claim. And I had to go outside the regular standard market because they've got 2, the house had 1, and it was basically uninsurable.
When we say the risk out of claim, we mean the house.
The
That's like
house.
in our terminology, yeah.
Okay.
So the risk out of claim, it means, yes, sometimes like we've talked about, you can have claims that had impacted that property previously.
Mm.
That can have an impact on getting new insurance. And then, of course, your potential buyers who have had claims. So then the question you've asked, you know, when you're in that process, of putting a contract in, I mean, obviously you don't want to pry, but it's nice to know, like, so if you had any claims before, prior losses, and if you know that, or if that's come up in conversation, maybe you're showing a house and they say, oh yeah, this is really cool. They've got a sump pump. I had a sump pump overflow claim in my last house. It was a disaster. That should set off alarm bells in your head to say, all right, I need to make sure that this person talks to their agent soon. And you need to be proactive, because I think what happens with a lot of agents is they are not proactive in having this conversation with their clients. And so because they're not proactive, they just think, well, you know, my buyer who I'm showing this house to, they've got an insurance agent. They work with, you know, Jim down on Main Street. They're just gonna call Jim and get a quote. It'll all, if you rely on them to be the one to initiate, we talk about it all the time. We get calls all the time from our existing clients that are closing on a house in 4 days. I had a commercial client who was closing on a medical building that they were going to have in-home patient care. They called on a Thursday. They were closing on Friday. That closing did not take place because no standard market's going to write that. It had to go through a non-admitted market. It took like 2 weeks. The closing was delayed. But we had one with a lender on, I think it was Wednesday of last week, and the lender reached out to us looking for evidence of insurance. And we're like, we've never even been called on this account. Didn't know they were buying a house. Called the client up. They're like, oh yeah, I meant to call you guys. I am buying that house. So even people that, even people that have an insurance relationship, you cannot depend on your client having a relationship and saying, well, they're going to take care of that on their own. You need to push them along, pry them along, mention it. If you don't mention it, I can guarantee you the lender is going to be pushing and prying it along to happen. So
Right.
somebody's gonna be asking about it. Me to do this?
You can.
We have a lot to talk about here, but we'll.
Yeah, this is probably where you'll end up with the most questions. These are the things insurance carriers are picking on.
Yeah,
So just,
yeah. We've got a few images up here, a few items, and we'll talk about these, but basically, what are carriers looking for on these inspections? They are looking at a whole host of things. These are some big ones. The roof age, that is the number one thing right now that you've got to be cognizant of. Most companies right now, it's 10, 15, 20 years. It depends on the carrier. If it's an architectural shingled roof, 15 to 20 years seems to be about the limitation. People always ask, well, what do you do if you don't know the age of the roof? If it's a house that was built in, say, 1980, and we get photos of it and the roof looks to be in really good condition, it's an architectural shingled roof, we know they didn't put those on in 1980, they didn't exist then we know the age of that roof is obviously newer. It's not the original roof, right? And as an insurance agent, if the roof looks to be in good condition, it's kind of like the best scenario because we can use our best judgment as to the age of that roof. And we will use our best judgment as to how old we think that roof is. There's no lifting shingles, curling shingles, things of that nature, missing shingles. Then that makes our lives easy. The place that I'm finding us struggle the most right now is these late 1990s, early 2000s properties where either because they're the original owner and they've admitted like it's the house, the roof that was on that house when I bought it, or just because we know the house was built in say 2003 and we know it's the roof and you can look at the streaks, the stains, everything else. We're like, it's in decent shape, but it's 22 years old. What do you do with that? Because these limitations the companies are putting on these roofs are
Absolutely.
hard stops. It's not negotiable. It doesn't matter. There's no conversation or story that we can
Nope.
spin. When they know that it's a 2003 or a 2002 house and that roof's 22 or 23 years old, that is going to limit your companies tremendously. And there are companies that have come out that will offer ACV on roofs, and that means actual cash value, a depreciation on roofs.
yeah, only the Virginia only companies are able to do that.
Correct.
The others are not getting permission to be able to do that. And what that means is that it would work a lot like your car would. So when something happens, they are gonna take that roof and depreciate it by however many years old it is, and they're only gonna give you a portion of it to replace it. Again, only Virginia only companies are doing that.
Mhm.
And the others are not getting permission to do that, period, in Virginia for whatever reason. So, 3-tab, I can't write any. Can you write any?
3-tab if it's under 10 years old, but the reality is not many people have been putting 3-tab shingles on their roofs over the last 10 years. Like if somebody got a new roof in 2015, they probably went architectural. Although I have seen some 3-tab that I know is newer, but yeah, 3-tab, like if you're going to replace your roof, put an architectural shingle roof on it, because in the reality is the price difference isn't that much. I know when I put that roof on my last house in 2012, I was going to put a 3-tab because I sat on the side of a mountain. You could not see the roof. And I'm like, I don't care if it's architectural, you can't see it anyways. And the roofer was like, the price difference is nominal. And so I went ahead and went architectural, but yeah, that's a big one.
These 15, 20-year roof rules are for shingles. So when it comes to metal, slate, tile, they are longer. I did have a slate roof that was 50 years old that they questioned me on and had me have them do a couple of repairs. So know that the metal roofs and the slate tile, those roofs are gonna end up being a little bit better, but again, 50 years for those, and you're gonna have some extra questions. The other thing that I will do is make sure, obviously we're having this conversation early, make sure they get a home inspection. I know we're doing these fast closings and cash purchases, but these home inspections can come in handy a lot. I've had a few deals that I had questions from underwriting and I was able to go to that home inspection done by an expert and say, no, I've got an expert saying this, it's such and such years old. So I've been able to, for the carriers that are having that conversation with you, I've been able to use those. And that's been helpful, but I mean, I literally had a lady, she's got a 20-year-old roof, it looks a little rough. We wrote her with one company, they went out and inspected, canceled her. We rewrote it with another one, they went out and inspected, I got another cancellation this morning. She's literally getting it replaced on Monday. But I bet money this week, I bet $5 at least, that I go back to that company and say, she's literally getting it replaced on Monday, they're gonna say, I don't care. Hard stop. So just know that that's happening. Make sure that your clients have a good agent they're talking to that is doing the background underwriting work, because otherwise you're looking at the possibility of them canceling post-purchase within a month.
Yeah, there were some questions.
That's kind of my question. If we have the buyer and we're going through all this process, but you know, the home inspector's noting that the roof is in good shape. You know, but it may be 20 years old. And then along the way, we find out that the insurance carriers are not going to insure it.
Mhm.
Then is the roof going to need to be replaced before closing? And that would
Yeah, so the question,
hurt the contract
yeah,
with the seller and the buyer.
yeah.
Right.
Yeah, so the question is, if there's a disconnect between, say, the home inspector who says the roof's in good condition, but the insurance company has this very hard deadline of 15, 20 years on the roof. Is the roof gonna have to be replaced? Is that something they're gonna have to do? Is it gonna have to happen before closing? It depends. That's the answer. Because some carriers we have good relationships with, we may be able to get your client or the seller goes under contract for a roof, pays a deposit. Let's say the roof's gonna be $10,000, they give a $1,500 deposit, there's a signed contract. We can give that to some of our companies and say, hey, listen, I know the roof hasn't been replaced yet, but they've got a contract to get it done in the next 30 days, 60 days. They're gonna get it done. Here's proof. And they will accept that. But I would say the number of companies that are willing to work with you on that, once again, you're down in that 3 to 4, like it's very small, the number that are willing to do that. A lot of them, it's just very hard deadlines of it's either they replace it or they don't, or it needs to be replaced. So the answer is it depends on who the company is. Some companies are more willing to allow them some time to get it done. And then other companies are like, nope, it has to be done or we won't even consider it. We won't even look at it. And the other thing that comes up, and I'm going to talk a little bit about home inspections. I can tell you as an agent, I never want you to send me a home inspection. I will differ here a little bit because
I tell them to send me the piece.
I want, if you
Send me the piece.
if you've got a piece that can help us, send me that.
Yeah.
But please don't send me that entire thing because we all understand that the role of the home inspector is to find everything and anything that's wrong with that property. And I can tell you, if we sent up home inspections to insurance underwriters, there would never be another homeowner's policy ever written, ever. Because they would pick it apart. I mean, think about all the things. Well, the GFCI is not in that bathroom correctly, or, you know, that downspout's disconnected and that could cause an issue. Or we got another crawl space and you should see the rot from this termite damage over here. I mean, no one would write homeowners insurance. So while I think home inspections are absolutely something that you should encourage your buyers to get, I always would say if we need something from it, I would like you as the real estate professional to help them to send us the portion that is relevant to our topic of inquiry, right? Because a lot of times what these, especially new buyers, right? They're young, you ask them questions. Well, what kind of plumbing do you have in the house? Is it PEX? Is it galvanized? What's PEX? What's galvanized? What's PVC? Is your electrical, is it knob and tube? Is it aluminum? Is it Romex? What's all that mean? I don't know what any of that is. And so then they have the tendency to be like, well, let me just send you this 30-page report where they rip the house I'm buying to shreds and talk about everything that's wrong with it. And I, as an insurance agent, I'm gonna be honest, I want some plausible deniability. I want to be able to, I didn't see that, I didn't hear that, I don't know about that, because it's not pertinent to what I'm trying to get at. I'm trying to get to maybe the age of a roof or what's the electrical panel look like. I may not want to know all the bad things that the property has. Because then when my underwriter says, well, what about this? Like, I don't know about that. I'm unaware. And it's not an underwriting guideline that I've got to meet.
So any more questions about roofs?
Yeah, roofs are a big one.
That's the big one. Okay, no more, any questions online? Good, okay. So the other things that they are picking on, tree limbs, any massive trees within 10 feet of the house. They want tree limbs. So like if you look up the side of the house, you don't see any overhanging the house, period. So if you look up the side of the house, I should be seeing sky, not anything overhanging. If it's close to the house, they don't want anything within 6 feet is a good rule of thumb. Any
Yeah,
other tree
nothing,
limbs?
nothing touching. I mean, and it's
Nothing
not,
touching, even
it's-
bushes. Like you have
bushes.
massive bushes next to the house, they want them trimmed away from the house. Especially when you've got siding involved, because they don't want.
they don't want ivy growing up the side of a house. They don't
Oh,
think that looks good. They don't
yeah.
love that because
Yeah.
it's destructive to the property. They don't want
Yep.
crepe myrtles. They don't want them touching.
Yep.
And then tree limbs, it's not just the big, huge limbs that
It's tiny
it can be tiny ones, just like the wind blowing across the roof and degranulating the roof and taking the granules off. Any kind of trees, period. And trust us when we tell you, we know how, first of all, tree repair and takedown is not a cheap task. And you talk about something that's gone up exponentially in cost. We had some of those storms earlier on this year and we had some trees come down and I had clients calling me and saying, I think I want to make a homeowner's claim. And I said, well, you got $1,000 deductible, you have a $2,000 deductible. You want to get somebody to come out there, take a look, see what it's going to cost just to take this tree that's blown over, to cut it up and haul it off. And they were coming back with $3,000, $3,500 prices on trees that were already down.
Yep.
So tree work can get really expensive. And if I am showing a prospective home buyer a house and I come up and it's just like trees galore, trees all over the place, I'm gonna say, hey, listen, this is a nice house. You wanna make an offer on it? That's good. We need to be thinking about these trees. We need to be thinking about negotiating with the seller that this is gonna be a sticking point for insurance. We had one at the lake that had trees growing all around it. And the lady that was buying it was like, I love the trees. It's the ambiance. I love the canopy and how it makes it. I'm like, the insurance company doesn't love it. And if you don't cut them back, they're not going to insure you. The other thing I've seen, I had this in Lynchburg a couple of weeks ago. An HOA owned the tree. So the client or neither one, the seller or the buyer, they did not have the authority to have the tree taken down. So then we had to get the HOA involved and get them to agree to come out and have the tree trimmed. So, sometimes these trees can really pose an issue because you got to get other parties involved to try to get them rectified. And so if you see that and are aware of that, you can discuss it. Yes.
Can you explain how your carrier underwriters realize that there are trees hanging over the house? Because sometimes realtors get out to the house and they're like, oh, it's not that bad, nobody will know.
Yeah.
Can you explain how that?
Sure. So the question is how do the insurance carriers know? Really, insurance carriers, they all have their different processes. Some of them have their own people that go out and inspect, and they will take pictures. They send us a massive report, just like your home inspections, right? But insurance companies do those themselves. Sometimes they contract out, sometimes they rely on us to do it. And then they will randomly choose, some that they go out on. So I think part of having a good agent is doing that underwriting up front. So I had a guy, a current client buying a new house. It is a cabin out in the middle of nowhere. I locked my doors while I was driving out there and it was a mile-long driveway. But I went out there and I'm glad I did because I immediately came back with, well, Simon, you're gonna have to take care of all these things. Like before our company goes out and does a random inspection, you're gonna have to go do that. So when these companies go out and do these inspections, typically they will happen after purchase, after binding of coverage, which is why they're coming back with these cancellations after the fact. And they will send us a report. They will send the homeowner either, a recommendations list of all the things that they want to do. Now, if we have a good relationship with those underwriters, sometimes we can go to the underwriter and say, hey, we got the report from the inspection. These items we definitely understand. Can you give us clarification on this? I had that home on Peakwood with all these retaining walls that were keeping just erosion from happening, but it wasn't really a yard, right? Nobody's out there. They wanted railings on every retaining wall. I mean, we're talking hundreds upon hundreds of linear feet of railing that would have to be put up around this house. So it took a conversation with that underwriter going, okay, well, this is one that's gonna fall on asphalt. We definitely need to make sure to have a railing here, but we can landscape the others to keep people from, falling. So sometimes we can have those conversations, sometimes we can't. And it's just a hard line. They've done an inspection, they don't like what they see, and they cancel.
Yeah, another one that is an issue is they have satellite imagery, guys.
Oh, yeah.
Which,
Drones.
yeah, if you
and-
think
yeah.
Google Earth is impressive, you should
Mhm.
see what they have.
Yeah.
We have carriers that literally have AI reading the satellite imagery, and when they try to
Yep.
hide that trampoline on the back 2/3 acre of their property where no
Yep.
one can see it because the insurance company said, I can't have a trampoline, that AI will identify it, know by its shape, its size, its circumference, that it's a trampoline, and it will come back in a report and it'll say, we believe there's a presence of a trampoline on the premises, which is a liability concern, and it's back on this part of the land. Even though we may have gone out and looked at the property ourselves, we never saw it. They live on 2 acres. It's hidden behind the barn that we didn't go behind, and they will catch that.
They're going out and re-inspecting stuff we have on the books too.
Oh, I had
just
one,
so you know.
I had one cancel last week. They used the aerial imagery to see inside of a fence in a backyard in a house over here in Cave Spring that I've never seen the back of. And they found all kinds of stuff back
Yep.
there, and they were like, yep, we want all this stuff removed. We want photos of all of it. So they can use aerial imagery.
Yes, ma'am.
Are they doing any kind of interior inspections, like looking at your electric? I'm hearing.
Typically,
about the non-tubes.
So she's asking, do they do any kind of interior inspection? Now, different carriers will have high value inspections. So any property that I rate 1 million, 1.5, they will want to go inside.
Mhm.
And they will do full inspections. Typically, no. Unless you've got a high value home like that. Now, there are certain pieces that we will have to go inside for, wood stoves. Or wood stove inserts, like fireplace inserts. We have to complete a 2-page report just on that piece to make sure that it's meeting all the code requirements and such. So yes and no. Typically not for everyday things, but if you've got something like a wood stove or a wood fireplace insert, or it's a high value over $1 million, yes.
Yeah, those are most common. I would say also certain carriers, if it's an older home, they'll want evidence that it's been completely maybe gutted inside or certain things redone. So they may ask for a picture of the electrical panel. There are certain panels that we run into this in commercial all the time too. There's certain panel types that are like no longer there's to code, they were to code when they were built, but companies don't like them, right? So, building codes are changing all the time. So things that may have been allowed, 30 years ago may not be allowed today, but they'll retroactively want to not see it in this older home and say, hey, have they updated this? Have they removed it? Is it non-functioning? One we have here like deck railing, which I'll talk about in a second, but like stair handrails.
Oh my
Go over into Grandin. And like all those beautiful old brick homes that have these super wide staircases, but there's not physical railings. They'll want you to install physical railings on those staircases. Like, and we may be looking at ourselves being like, well, what's like, it's 100 years, nobody's fallen down that staircase before. They don't care. And like to get a railing retrofitted on some of these is either A, very expensive, or B, is gonna look really bad. But they don't care what it looks like. They don't care. They're like, is it more than 3 stairs? Is it more than a 36-inch drop off? If it is, then to code, they're required to have a railing, and we're gonna mandate there is one. And you may drive through Grandin today and say, well, how are these people getting away with it? Well, certain carriers may not have cared. They may have had their coverage for the last 20 years, but I can assure you in the current market, something that insignificant can become a big deal. Deck railing spacing, 4 inches is the code. So if it's wider than your fist, then it's not the code. And so where I see that come up a lot is if the deck has, let's say, like that picture right there, those are certainly like wider than 4 inches. I could put a basketball between each one of those. And it's the rule about like a child's head that it couldn't fit through. That's why they have that rule. But some decks, you'll go and look and they have the horizontal balusters where they just like has a top railing, they put like 1 or 2 and call it done. I have one right now. We just got an inspection back. It's one of these older houses. It's a duplex, and it's the old metal railing where it's the tube metal railing. It's like pipe. And there's just 2 of them. There's like 10 inches between that. So with those, we'll hopefully be able to talk to an underwriter and see if they'll consider, but because it's a duplex and our client lives in one side, they're renting out the other side, that's increased liability exposure. They may want them to redo the entire railing, and you're talking, probably $3,000 or $4,000 minimum to redo that railing on that particular one there.
The other thing we're seeing too is pride of ownership items. So having it nicely stained, having it painted, having it cleaned, if it's vinyl siding, having it power washed, having it free of debris, having, not all the kids' stuff strewn all over the yard. Christmas lights. I had one come up in an inspection because they still had their Christmas lights up in May. It's a pride of ownership issue, because if they're not taking down their Christmas lights, what else are they not taking care of? So that's some of the things they're picking on too. And like the paint, the siding, the drainage, gutters, and they are picking on sheds.
Yeah.
So the house might be immaculate, but you've got a shed in the back that hasn't been touched in 25 years. That's a problem. I had a beautiful home over there by Roanoke Memorial. House was stunning, but he had a shed in the back that, literally it was so grown over with ivy, and the roof was awful on the shed. And he's like, I don't use it. But they were like, either replace the roof on it or tear it down. So we ended up not writing it because he was like, I don't really wanna. I said, well, okay.
Yeah, there
So-
are companies that'll do it, but they're gonna exclude it. They're gonna
Yeah.
exclude the building. But
Yeah.
that's, once again, Jamie brought it up earlier in a question. It limits your carrier access. So we're like, yes, we could write a company where the rate's a $900, let's say,
Mhm.
but you're gonna have to tear your shed down. I don't wanna tear my shed down. Okay, well, your rate is now $2,000. Because this other company that lets you keep the shed, we're gonna not only let you keep it, we're gonna exclude it, so we're not gonna cover it. So you're gonna get less coverage,
Yep.
but you're gonna pay more because you don't wanna do this thing. So it doesn't always make logical sense, and it's just the way it is.
So we talked about those post-binding cancellations. This is how they're doing it. So insurance companies work out in their contracts, in their policies that you sign as part of that application, that they have legally 60 days to go out and inspect and send adjust coverage. I've had some that, you had this replacement cost. Well, after inspection, we think it's this. They'll change it or want me to adjust it. Or they'll, go out like this roof lady. It was right borderline, so they sent me a fax. Who uses faxes anymore? But they sent me a fax saying they were canceling and it was non-negotiable. So the inspections can trigger cancellation. They can also trigger if something comes up in reports after we've bound. So say you've got a buyer shopping for that house. We've run the clue report when we did the quote. We've, 6 weeks later, now we're closing, we've submitted the quote, but they run the clue again when they're processing that and something came up there. So they still have that opportunity after the fact to cancel policies.
Yeah, the 60 days to cancel or adjust coverage post binding, like everybody always is familiar with the word. You hear it all the time. Auto industry, we hear it like, I need a binder, I need a binder, I need a binder. Binder's a specific term. It basically means temporary evidence of coverage. It's not finalized. The carrier has not completed their underwriting process. So we hear all the time, like a client says, oh, I've got coverage, I've got a policy. My company doesn't care about X, Y, and Z, and then of course, 30 days later, an inspector goes out or the carrier takes that aerial imagery that they have. I mean, we have software in our office right now that I can type the address, any address in the United States, I can type in and I can get a report. And it's going to use AI and it's going to tell me, it's going to rate the roof on a scale of 1 to 5. 5 being as good as it can be, 3 being average, 1 being bad. It's going to rate that roof. It's going to give me this report. Carriers have access to stuff in underwriting. I've seen some of them that's way more advanced than what we as agents have and the data that we have. So we can write a policy and think we're home free and that we're good to go. And then they can turn around. And sometimes I had this happen. I had a policy written by one of my staff members that they didn't realize that the person had filed bankruptcy. And bankruptcy was a kick out with this company. If you filed, now they're good enough to buy a house with a lender. It was the newly married, and the gentleman had been a customer in our office for years, but he got married, and the new lady that he married had a bankruptcy from a prior divorce, like 3 years, 4 years prior. And it was going to kick them out, and they didn't want the policy any longer post issuance. So these these reports, these things that come back, that's why we try so hard on the front end to underwrite as much as we can, to get all the information up front that we can, to ask all the questions, to go through all these reports if we have access to them, to try to make sure that doesn't happen. The last thing you want to do is have a client buy a house, should be a joyous, momentous occasion, and then find out that the insurance is just ruining the whole deal for them, either because it costs way too much, or they can't get coverage, or not at a price that's affordable. So yeah, this is a big one right here.
So that's gonna beg the question. Well, can you bind it before we close? We can't bind it before closing. We have lenders ask us all the time, we need the deck page, we need you to submit before closing. We can't, because there's a lot of our carriers that we can't change it afterwards. So if that closing day changes, we're stuck. We can't change it. We have to cancel the policy and go through the whole process again. And it may have changed since, the 30 days prior when we initially quoted it. So that's another big thing to note, is that we can't bond. We can try and do all of this up front, and we try to do a really good job of doing all that underwriting up front. But end of the day, we can't submit prior to that closing. Yeah, Jamie.
Repeat my question. We have a question from Zoom. Someone is asking if you have any options for roof replacement, such as roof mats.
That's not a replacement, that is, something they spray on to make it look like.
So,
It popped up. So I
okay,
don't know if I'm
so the
supposed to-
question, so the question is, can you do roof repair really by Roof Max, versus replacement? I mean, no.
Not with that wouldn't, because you wouldn't get, they would say that it will increase the life expectancy of the roof, but they're not gonna care. Now, can you do repairs that could get you to a closing if it's something like we're missing some
Possibly.
shingles, we've got some lifting shingles, some damage in an area? Is that possible? Yes. But if someone says, I've got a 22-year-old roof, I'm gonna spray this Roof Max stuff on my roof, and now I've got a warranty for another 10 years. That's another thing that we run into. People are like, I bought a 50-year roof. You bought a roof that is projected to potentially last 50 years, but the insurance companies don't care about your 50-year roof and that warranty. Also, a lot of times these companies go out of business. The manufacturers of the shingles go out of business. Like, there's no one,
There's
look
no
up and see,
accountability.
go and look and see how many people get their roofs replaced under warranty and what that process is like. Like, have some technology break in your house and say, you know what? I had this thing break, but I'm gonna go take it and get it repaired under warranty. And you know all the hoops you have to jump through? Now imagine a roof. Because I'm sure there's all kinds of stipulations as to how it was installed. Did they install it properly? Did they put the right ice dam shield on? Did they do this? Were the valleys cut correctly? What was the flashing done? And if they find any way or shape that it was installed improperly, then it'll fall back on the installer instead of the shingle manufacturing company. And that installer may not be in business in 30 or 40 years. So yeah, there's no way, even though it may extend the life expectancy of a roof. And if you had a roof that was, say, 15, 16 years old, and so it was like right on that precipice, that may buy you some more years. No insurance company would accept that in order to get you a longer,
Yeah,
kick out period before they would say replace the roof.
No.
Yeah.
So we talked a little bit about this before, but previous claims follow the person. So it's gonna follow your buyer if they had previous claims within the last 5 years. That loss history matters. It's gonna mean rate issues. It's gonna mean eligibility issues with carriers. So just be open from the get-go, and we can try and work things out. Again, another important piece of find an independent agent. I also have partnered with captive agents. I'm sure you do too. So we have our own partners with captive agents. And what that basically means is that they have their one option. That's it. They work for that company. So State Farm, Allstate, Farm Bureau,
Yeah, yeah.
Nationwide used to be, but
Farmers.
farmers, those are captive agents, so they have that one option. So we partner with them all the time. We know what their appetite looks like, and we can sometimes lead a client in that direction if it makes sense. But a lot of times with the companies that an independent agent has, again, we start out with 15 and then we narrow it down to what's gonna fit best. Sometimes we have multiple options. There's a few clients I try to at least shop 2 or 3 that I know they'd be eligible with, so that I have a few different options. But all of those things, if you disclose early, can help the process.
Yeah, there's captive companies sometimes that can do things that are just like not able to be done with other companies, but I will say it's few and far between. I mean, typically we have, as an independent, you have way more options. It's like, I used to always use the analogy of a shoe store. If somebody only sells red shoes and you need a pair of brown work boots, you probably need to go to a store that offers many options. But there are certain things that they can do, which is why we do sometimes refer a piece of business out. We can say, hey, listen, they're okay with whatever's on your property concern, because I know they've written one like that before and it's apparently in their appetite. So let me send you over there. But I can tell you right now, it's probably not gonna be the best price for the client. It's probably not gonna be the best coverage, but it will at least to get them hopefully across the finish line. And we didn't talk about this earlier, but to talk about like ACV roofing, I mentioned this and she talked about Virginia only companies. What you run into there is if the person that's buying that house, if they are using a lender and they're getting a loan and Fannie Mae or Freddie Mac are involved in that, they will not accept an ACV roofing schedule. And this has been a big back and forth. There was some stories, you can look it up on Google. There were some stories in the media about this, maybe May of 2024. There was a lot of back and forth because this is happening a lot in other states where Virginia, it's very limited to who will do it. In other states like Illinois, Kentucky, they've had laws changed that say that companies can do actual cash value on roofs, which should make it the market better for the consumer, because you may say, I'm okay buying the house with the 22-year-old roof because I've looked at it, it's in good shape. The inspector did say it's okay, so I'm fine with it. But if you are getting a loan on that house, the lender is not going to accept it. So even there's just this disconnect sometimes of like, even if we have a company that's willing to do that, we may get stymied by the fact that it's not going to meet the requirements of the loan. And so you need to be aware of that too. I had a deal that didn't close because of that. I had a deal, client had a contract on a house. The roof was like 22 years of age. About a $600,000 house. We found a carrier that said, yep, we'll write it with a ACV roofing endorsement. It's a Virginia-based company. And the lender said, no, we can't accept it. We won't accept it. And so it's like, well, at this point, we're kind of stuck unless they replace the roof.
Another one that comes into play there is flood. So flood insurance is a whole nother ballgame. And it is so regulated and there's so many different rules that surround flood. So you will have carriers in standard market that offer some inland flood coverage, like as an extra, as an endorsement. That is not going to meet some of the loan requirements, but it might be good for the client. So make sure that if they are by a waterway or in one of those zones, I know you know when it comes up, that you're talking to that insurance agent early. Sometimes we can get really good pricing on flood in private markets. Sometimes we can't. So that's something that you're going to want to know prior to putting in an offer. I have a lot of real estate agents that call me all the time. Hey, it's in an AE or it's in an A. Can you run it to see if you can even get coverage or if we're stuck with FEMA? Because it'll depend on what our offer looks like. So, you've got our information. I'm happy to answer those questions. It's so easy for me to run. So one of those things that can come up. So
agents have called me in a panic before. I've had a panicked agent call me and they're like, oh my goodness, I put an offer on this house. We didn't put a contingency in here about flood. I didn't realize it was in a floodplain. Like, what can we do? How much is this going to cost? And if it's really costly, if it's $4,000 a year for flood insurance and your client is barely hitting those DTI numbers to purchase in the first place, can kill a deal.
We talked about claims history. That comes up a lot, obviously pretty important. Unoccupied homes, that's a big one. Another thing that we're running into is major renovations. So I have, carriers, you're not gonna be able to write a home if they're doing 3 months of renovations and they're not gonna be occupying it during that time. It changes their insurance. So make sure that you're upfront, about what the planned, renovations are. And to what level you're doing those renovations. If it's just a kitchen reno and they're in 2 weeks, that's different than, they're gutting the downstairs to put in hardwood floors and it's gonna take 2 months. Dog breed exclusions, that's a big one. We have a no-no list for a lot of our carriers. Some of them are say, okay, well, we'll do it, but we're gonna exclude dog, because you've told us you've got one, or that's something that will come up on home inspections all the time. They'll go to the house and they hear a dog. They're gonna mark that in our underwriting or home inspection reports, and our underwriter's gonna be like, what kind of dog is it? If we didn't disclose it. So that's definitely something. The one that surprised me recently is German Shepherds have been added to a couple of my lists. That was not one of our historically aggressive breeds. This is a point of contention for me. I don't like this no breed list, but as an agent.
Yeah, there's been, I had a company a couple of years ago that added, and this is gonna sound crazy, I'm gonna say this, they added labs to the restricted breed list. Yeah, now let me tell you why they,
Anti-dog.
let me tell you why they did this. They did this because they did research and they found that the majority of dog bites were done by labs. Now, me, I'm a logical person, so I very quickly surmised that their most popular dog breed in the US is the lab. So as a consequence, that may just be the reason why they're causing the most dog bites, not because they're overly aggressive, it's just that they're the majority of dogs. Well, luckily, I wasn't the only one that was keen to this. And so enough agents complained and said, hey, you're gonna have to go rework this unless you just want to not write business anymore. And because the thing about the breed restrictions is it's that breed or a mix of the following breeds, and people don't realize that. So
Sometimes I just have them send me a picture of the dog.
yeah, and the Labradoodle should not be kicked out just because you don't want to ride a lab. The Labradoodle's fine, but the long story short is the company eventually reversed course. But like, that's why agents, sit on agent advisory councils. We talk to insurance companies. We talk through situations like that to try to get that stuff, overturned if we can when it's really crazy. But it's
a narrowing factor. You just got to know it's a narrowing factor. So, and then you've got some companies that are like, okay, I don't care what breed you have, as long as there's no history, as long as there's no bite history. So it just disclosing these kinds of things early and knowing that they're being looked at is just how you can better prepare your plan.
Yeah.
We talked about these, right?
Yeah, we talked about a lot of it, the 12-year-old roof with 3-tab shingles plus tree limbs.
Yeah.
You got a 12-year-old 3-tab roof, you're probably not getting coverage in this market. The 10 years is about the limit on the 3-tab right now. And like I said, the problem with that is almost all 3-tabs in existence were probably put on longer than 10 years ago. So, and there's a ton of those roofs out there. And if you don't know what we mean by that, you can Google it. It's basically just like the shingles that are flat looking. There's no like 3D effect. Yeah, to them. You have one. Yeah, so that's what we mean by 3-tab shingles. 3 claims in 5 years, virtually no, there's no carrier that's touching that. And the unfortunate thing is sometimes these claims they get turned in. This is where having a good agent comes in handy, because we can tell people a lot of times like, hey, how about we get an inspection first or get a contractor out there to look at this before we file a claim. We had a call come in yesterday. The guy had a water leak, but he didn't know where it was coming from or what it was. He just knew that he had one. And we're like, was it gushing in? Or he's like, no, it's a slow leak. Also, that's another term, slow leak, but I won't go down that path. Slow leaks typically aren't covered by insurance. It has to be sudden and accidental. That leak that's been going on for 7 years probably isn't covered. But we told him, we were like, they have not invented the X-ray vision for insurance adjusters. So you can file that claim, but they're not going to know where it's coming from either. You need to get out a tradesperson, a contractor to do some investigation. They may have to tear out some drywall, find out where that leak is, figure out how significant it is, and maybe you don't file that claim. Claims that I've seen in my career. A landscape light set a bush on fire, filed a claim. Somebody stole a push mower out of a shed, filed a claim for the push mower. A cabinet fell off of a wall because it wasn't secured to a stud, filed a claim because the cabinet fell off the wall. And probably my favorite that happens a lot is the ice maker went on the fritz and damaged the hardwood right in front of the refrigerator. Now that can be costly, but with deductibles creeping up, like when I started in the industry, 500 was common. Then it's 1,000, now it's 2,500, it's gonna be the new normal, like that will be your new minimum deductible. Within the next 3 years, you're not gonna see deductibles probably below $2,500 being offered by companies. And so with that being the case, like maybe that $500 bush that got caught on fire with some mulch was not a claim worth making. Because insurance companies look at two things, severity and frequency. Severity is how bad was the claim, frequency is how often are you filing. You are better to have severity than frequency. So if you have a bad fire claim, stuff happens, they get that. It's the constant claim every year and a half, 18 months, 2 years. That is what will keep you from getting insurance. So that's an automatic decline. You want to talk about that? Because it kind of was on the last slide, the 60 days and the HO3 and the requirements, like that buyer not moving in 75 days.
Oh,
Yeah,
yeah, so there's a lot of these houses on the market right now because inventory is low, right? That you've got some fixer uppers out there and they're getting good deals on them, which is great, but they're not gonna be owner occupied for a good 60 to 6 months, 60 days, 6 months. Those do not qualify for your standard homeowner's policy. So what we end up having to do, depending on the carrier, again, depending on the company and what level of renovation they're going through and however long they're not going to occupy it, we may have to write it on a commercial builder's risk while it's unoccupied. And then once they are in it, then we switch it to a homeowner's. New construction, again, that's gonna be your typical homeowners, and then you just put a builder's risk endorsement on it. So there's different ways to do that to ensure that coverage is written properly. And if it's not written properly and something happens, guess how much coverage you have? 0. So because they're gonna call it a misrepresentation, and they're not going to cover it. So if you've got a client, they know they're gonna go in the door, they're not gonna live there for a good month, and they're gonna be doing some work, talk to your agent, because different companies, again, have different criteria with that. But it's gonna be important for them to know that early so that you can figure that out. Because the other thing is that you change policies maybe 3-6 months down the road. So maybe it makes sense to, pay monthly so that they're not having to pay up front all that money. That's something you're gonna have to work out with your lender too. So all of that kind of needs to start earlier. I had a client who literally, we were working on homeowners, we were 2 days before closing, and she all of a sudden tells me, well, I'm actually not moving down there. She's moving from Maryland. I'm not actually gonna be down there until Christmas. I was like, you're what? Because I had to completely switch gears. The lender got frustrated because I had a whole new premium, which was almost double. And the client didn't understand. So it's really important to have those conversations because you guys are the ones walking through these houses and they're talking about all the things that they want to do and all the big dreams they have for these houses. It's going to be important for you to tell them, like, that's going to make an impact on insurance. Go ahead and start talking to your agent now.
Yeah, it's gonna make an impact on their lending as well, right?
Correct.
Because they went and got a pre-qual letter based on, hey, I can afford X, Y, and Z house. Then they find this house, they want to do all this work through. The lender may not be aware of the fact that this is what's happening as well. And you all know there are special loan products that exist for rehab and renovation. And we need to be talking about that because the lender may not be able to accept that builder's risk policy, but that's all we can write on. The lender says, well, we got to have an HO3 on this. When HO3 is the technical term for a homeowner's policy, and we're like, they're not owner occupying it. They just told us they're not going to be in it for 7 months. If I write this policy and this thing catches on fire, guess what? There's no coverage because, like she has said, material misrepresentation means at the time of application, they knew they didn't intend to occupy it. And because they didn't, and now a loss has occurred, the carrier can basically return their premium to them and say, good luck, you have no coverage. So yeah, it's important that if you're showing a house to someone and they know that they're going to be spending an inordinate amount of time renovating it, or they're going to be spending a lot. And sometimes carriers will, work with us. I have some carriers that'll say, okay, well, You know, when are they planning on moving in? What are they planning on doing? Give me a story. What's going on? We may be able to extend that a little bit with some companies, but that 60-day period is
Yeah,
pretty
30 to 60
universal.
days, 30 to 60 days is workable, negotiable. Sometimes they have me add an endorsement for the building materials stuff, the builder's risk endorsement for that time period, and then we take it off when it's done. But again, it's only if you have that relationship with your underwriters. Like, I can't do that with travelers.
Yeah.
Because I go to, a call center. When I call underwriting, it goes to a call center in India who I can't understand, and they give me one-liners from the booklet.
Yep.
Okay, so that's what we're up against too, because as customer service declines for the client, it also declines for us. We try, I think, really hard, independent agents in the area try really hard to make sure that we're doing a good job for our clients and we're advocating for them. But the earlier we know, the better off we can have that conversation. And then it doesn't look like we've got something to hide with our carriers. And then we talked about, some companies requiring bundles and not, or they won't require it, but they're also not gonna price you in a way that you're gonna wanna buy it, or they might say, okay, well, we'll do it. And then if they don't give us the other side of the business next year, we'll just non-renew. We'll find a reason. So be aware that that's happening too. We harped on this throughout, I think, but.
Yeah.
Yeah.
Yeah, so access to multiple insurance companies, I mean, that's what an independent agent is. People don't all, like, the terms get thrown around, broker, this, that, and the other. All an independent agent is, which is what we are, we're independent agents. Broker actually has a different meaning, but I can get into that. I'm not going to. Independent agents just have access to multiple insurance carriers. And the reason that we have that access is so that when we do run into those one-off scenarios, hopefully we have a carrier that will meet that need. Not all the companies are equal. Knowledge of underwriting rules. This is a huge one. There's so many people that, go online or buy policy through, maybe it's a lender insurance referral to a company that's in-house, and they don't know all the rules and they don't know the market where we are locally. They don't know the types of things that come up here. I mean, if you were working with an agent in inner city Richmond, I bet you wood stoves probably don't come up that often, right? Because there's not a lot of people with wood stoves there. But here they do. And here we know those rules and those guidelines. And so we can kind of walk clients through what they need to be thinking of. Is this going to meet the requirements? And then guidance for buyer and lender coordination. I mean, most of the people around here that are in this business, we all know each other. We've worked on a deal before. We've gotten something done before for a client. I've absolutely reached out to a lender before and said, hey, listen, I know you just sent this referral over to us. Have you seen the house yourself? Because the people that have seen the house at that point are the buyer and the real estate agent, but maybe the lender hasn't seen it. I'm like, what kind of loan are you doing? And if it's like a government loan and they're like, I'm like, this shed's gonna have to be painted. And like, there's so many things that just are unaware. And so if we are able to, on our side, have those conversations early, we can kind of set everybody's expectations from the beginning of, hey, this could be a problem. This is going to be an issue. Let's not get into 3 days before closing and have this deal blow up. We want to walk our real estate partners, our lender partners through those types of things. And in a hard market, it's critical to have somebody that you can rely on and trust, that knows the market and knows the companies that will do certain things. Like I have a company in my office, and one of the things we use them for is if somebody has a wood stove in an outbuilding. People don't realize this, but wood stoves and detached garages and detached buildings, they are a big no-no with almost all companies. But I've got a company, I've got one. And this goes back to, you've brought up the narrowing of the market. Jamie had a question on the narrowing of the market. What it means is, yeah, your premium's $2,700. Well, I can get it. You can't, because that company won't write that, and they are not going to do that, but this company will. So that's what it's going to cost. And now our market's narrowed. Now, if you remove that wood stove from that outbuilding, we can look at some other options. Well, I want to use it for my wood shop, and if it gets cold, I want to be able to go out there. I'm like, I get it. Then we've got this company, and this is what we're going to place this with. This is what we're going to do. So.
I had a thought and then it's gone.
It happens. I've had lots of them.
The other thing, I love it. Love it when clients go, but I'm with Progressive, so they're gonna offer it to me for $800 a year. And I'm like, okay, great. Send me the quote. Progressive doesn't have their own homeowners insurance company. They farm it out. And then guess where your customer service comes from? I have no idea. And you know, they're $800 versus my 1,500. Well, here's all the things. So, you know, I just had that happen this last week. Now she went with another company and I'm like, okay, I hope it wasn't Progressive. So access to those multiple carriers, sending quotes, like if you've got a good agent, sending those quotes is not going to harm the client in any way. We can do those comparisons. We understand the coverages and we can advise you one way or another. And one of the things that I love to do, and I do with every client I have, as long as they're agreeable, is I actually do a screen share video. Like, send me all the quotes you got. I'm happy to sit here and compare line item by line item. And then you choose what's important to you. Just like buying that house, that client's got to drive the bus on what's important to them, but I'm gonna let them know every single coverage that's out there. I'm gonna make sure that they know that they have the opportunity for this. They have these underwriting questions. Hey, run through these. Make sure there's nothing we're missing. I know this is a step for later, but let's do it now. Make sure nothing's gonna come up. It's gonna squash this deal. And I think at the end of the day, in this hard market, you know, lenders and realtors have always been this like super tight meshed unit. Just add us in there because it's going to squash a deal if some of these things come up. And we have so many issues that used to not be issues, narrowing that market, that the more we know up front, the more we can coordinate with you, the better service you give your client, and the more likely they're going to want to, you know, use your name in a rapid room.
Yeah, it's hard because insurance is not the tip of the spear, right? We always get brought in on the backside, you know, like real estate agents and lenders are the tip of the spear. Lenders are pre-qualifying them, real estate agents are showing them properties. And so we get brought in at the end, and we're kind of like at the 11th hour being like, hey, has anyone looked at this? Has anyone considered this? Are you guys aware this could be an issue from an insurance standpoint? Everybody cares about price until there's a claim.
Mhm.
Right? Then all of a sudden they care about coverage. That's why you see people on the news when those bad storms hit and they're bashing the insurance companies because of how bad they are. Now, some of them are bad. But a lot of it has to do with they don't know what they're buying, right? And they are trusting the people that you guys work with, that you refer them to, that you work with, to give them that guidance. And so that's what a good insurance person can do. A good insurance advisor can try to steer them in the right direction, give them that advice and help them. So yeah, that's excellent.
Yep. And we've talked about all these things. So there you go.
We said start early, very early on, didn't we?
I know we did. That's it.
Any questions? Anybody has?
Questions? Yes, ma'am.
One of the things that happens sometimes as far as the claim history
Mhm.
is, sometimes somebody calls and inquires about a claim, let's say a lawnmower thing or whatever it is, and you may have the conversation saying, well, it's not in your best interest. Sometimes people aren't as good as you are, and you'll ask them a question, they'll kind of start a claim. And that's enough to, and I've had that happen personally, when I didn't make the claim, and then it followed me for 5 years, so that does happen.
Yes, she remarked that she has just called to inquire about claims, or even like starting to investigate a claim, and then it acts as if you filed that claim. Yes, that's why it's super important. Call your independent agent, because we don't push any buttons with the carrier until after we've had that conversation and you say, yeah, it rises to the level of the claim. With claims, I always tell my clients, it's not for inconvenience, it's for catastrophe.
Yeah.
So if you've got something that, you know, is gonna really, you know, in your head, it's gonna be $5 grand or more, that's when you really start considering making that claim. That insurance should not be your fix-all. Get your home warranties, get those for those kinds of things. Insurance is gonna be those catastrophic events.
Yeah, I had somebody last year, I went to a meeting, and this is my favorite line I've heard in a long time. Insurance is like electricity. The more you use it, the more it costs.
Yes.
So, nothing can be truer. But yeah, there's a lot of times people will call in and have a claims question and they call directly to the carrier.
Oh, yeah, they
They're
started.
going to file a claim. Like you cannot call the company directly because they're obligated. They've been put on notice. We can have a conversation with you and like, we're going to direct you to file claims if we think it rises to the level of filing a claim. I always start every conversation with, it is your policy. If you want to file a claim, we will file a claim for you. But here's what you should do first to make sure that it makes sense to you. Let's call that plumber. Let's call that contractor. Let's call that person to come in and take a look at the damage and just assess what we've got. And then we can make a decision about whether to move forward.
The other question I get all the time too is, do independent agents cost more? No. You're gonna pay the same premiums. You just have awesome advice coming with it
Mhm.
and somebody who knows what they're doing. Questions, that's it. Yeah.
Yep.
Anybody? Okay,
Perfect.
thank you. Thank you for your time and your attention. I know that was a lot of talking about things that
Yeah.
nobody likes.
Yeah.
Outstanding.
Thank you,
Thank you.
guys.
And the education committee, please complete your surveys and please let us know what you would like to learn more about so that we can bring it to you. Thank you.
Thank
Shanna,
you.
Derek. If anybody has any questions after the class, please feel free to ask them or contact them at any time.
Oh, hey, I don't know if you guys can still hear me. I'm Christine Sands here, watching from the Zoom. Derek, do you think you can give me a call, after the class? I have a policy with you guys and started a claim for a loss from this weekend. Can you give me a call?
Yes, I can. I reckon